Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone out there for supporting the channel. If you guys do like the content, if you guys do like the video series, feel free to like, share, and subscribe. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. For today's video, in response to a number of viewers on the channel, I thought I'd take a look at Dr. Pepper and its very large special dividend of $103.75 per share, with an upcoming ex-dividend date on the 5th of July. So unfortunately, because tomorrow is a stock market holiday for the 4th of July, there will be no trading. Unless you already have this in your portfolio, there will be no opportunity to pick up this stock to qualify for that very large special dividend. Again, $103.75. I've tried to do a number of these special dividends in the past, and just because of tax exposure, they typically turn into negative trades. Unlike a normal dividend, which is simply a proportion of the company's profits given back to the investor in the form of a dividend, typically these are because of something major happening within the company. With Dr. Pepper, the major activity is going to be a merger between Dr. Pepper and Keurig Green Mountain Incorporated. It will optimistically produce a synergy between the very large distribution center of Dr. Pepper and the very large online and market brand of Keurig Green Mountain. Unfortunately, that synergy probably won't happen over the short term, and it's a longer term play. You may be able to get a positive swing trade out of this particular dividend plus capital gains over the longer term, but for the short term, this is definitely not amenable to a short term dividend capture as a normal dividend would be. If you take a look at the stock overall, just to remind you guys on the bottom here what this stock is, it's Dr. Pepper Snapple Group, engaging in the manufacturing, marketing, and distribution of non-alcoholic beverages. And the big part of this merger is that Dr. Pepper Snapple Group has a very large distribution network, and Keurig Green Mountain Incorporated has a very large online presence, as well as a very favorable market brand as well. So hopefully the synergy between these two companies will produce some capital gains in the future. But again, because of the large tax exposure, I don't believe this will be a very good trade for a dividend investor looking to do dividend capture with. So just quickly wanted to go over this dividend. Probably one of the largest dividends I've seen, special dividends I've seen in quite some time. Again, $103.75 per share. Again, because of tax exposure, I don't think it's a great trade. For example, if you round down the dividend to $100 just to make the math easy, if you get that dividend in your portfolio as a cash payment, you'll end up having to pay back 30 to 40% of that to the government in the form of taxes, depending again on your tax bracket. So because of that, it really kills the dividend capture aspect of this deal, and you'll really have to look for the longer term capital gain to make any positive trade on this type of dividend capture. Again, I don't recommend this. I'm not going to be doing this particular dividend capture just because it will take a very long time to get back your capital with this particular trade. So again, let me know if you guys are jumping in for the special dividend. If you guys do, please let me know how it turns out. Again, because of the tax exposure, I don't think this is going to be a very good dividend capture moving forward. But not to make the video too long, I'll kind of end it here. Again, if you guys have any questions on this video, other videos, please let me know. I've done videos on special dividends in the past. Please take a look at those to get further insights into why this strategy simply doesn't work over the shorter term. For the longer term, if you believe in the synergy between the merger, I think this will be a very good deal. But simply getting into the stock to capture that dividend and then getting out in a positive swing trade, you will not make a positive swing trade anytime soon just because of the large tax exposure that you will essentially be exposed to with the trade. So again, not to make the video too long, I'll kind of end it here. Again, if you guys have any great video ideas, any questions on this video, other videos, please let me know in the comment threads down below, and I'll do my best to get back to you guys as quickly as I can. So kind of with that, I'll end the video, and we'll see you guys next time.